Welcome to your first afternoon session. This is the finance panel. Hopefully you are all in the right place. My name is Molly Duplashane. I am the Deputy Director of Policy and Administration for the Department of Excise and Licenses for the City and County of Denver. I have been with the city since 2007, and then have been working on marijuana policies with Ashley and the team since 2014, and then converted over to excise and licenses with that team in 2016 as well. So I'm going to be helping facilitate this finance panel. So I will introduce our panel here, and we're all going to actually run through some presentations, and like this morning's sessions, we'll leave hopefully 20 to 30 minutes at the end for questions. So to introduce the rest of the panel, we also have Iris Akita here from Hawaii. She is the appointed attorney as the State Commissioner of Financial Institutions for the state of Hawaii. Next, we have Kara Martinson, who is the Executive Director for the California Cannabis Authority. She works to develop and manage a database of cannabis information for local regulators and financial institutions. And she is joined with Adam Crabtree. He is the CEO of NCIS Analytics and the data partner for Kara and the California Cannabis Authority. And then finally, we have Mike Gural. Did I get that? The partner in charge of Squire Milner's cannabis practice, and he's responsible for the firm's, or for accounting issues with the firm's cannabis clients. So we've got a wide array of finance and tax issues. We'll kind of touch on lots of different things here, with each of us kind of hitting a different topic. I am going to start with Denver's approach to taxing and our revenue and our budgeting approach with our marijuana revenue in Denver. You heard a little bit about some of these numbers this morning, but this is just kind of to display what our marijuana business landscape, licensed landscape looks like in Denver. We currently have 1,116 active business licenses. That is 36% of the state's marijuana business licenses, yet in Denver we have 13% of the state's population. And so we just from the very beginning, from those medical days that were talked about a lot this morning, kind of became the hub and the center of the marijuana business industry here in the state of Colorado. And then we show here both licenses and the number of locations that we have in Denver. So you can see we have a total of 476 locations. You'll notice, if you're doing math and you love numbers as much as probably all of us on the panel do, that those numbers don't add up. And that is because you can have one location with several licenses, and you can have, you could have a store that has both a medical and a recreational license, and then you could also have one location that would hold several different types of business licenses. They could have both a manufacturing facility and a cultivation and a store, and then if they have both medical and recreational, all of those require licenses, but could all be based in one location. So again, we have 476 locations that have a marijuana business in them here in Denver. That, I think, will come into play a little bit as we talk through some of the resources and what we've done with the tax revenue and how we've budgeted our expenditures. Because what 476 locations means is that it's a regulatory burden on our city. So there's a lot that goes into inspecting and making sure that all of those places are operating safely. And so having to get eyes on 476 different locations throughout the year just means that our fire inspectors, our licensing inspectors, and all of our city personnel that help regulate and enforce this new regulated industry, that's the burden that we have. An interesting note, I think there was some conversation about caps and stuff this morning, and I think Brandon from Portland said that they do have more marijuana stores than Starbucks. That applies to us here in Denver as well. 216 locations in Denver where you can go in and you can purchase marijuana. I think we're in the 50 to 55 range for the number of Starbucks that we have here in Denver. So then people also say, wait, there's more places in Denver you can buy coffee than just Starbucks, but I just give that as some context because, you just feel like you see a Starbucks everywhere, and so, you see 4 times as many marijuana facilities or business stores. So out of all those 216 locations, what does that turn into for sales? In 2017, just for the city of Denver, we had $584 million of sales of both medical and retail marijuana in Denver. That was a 16% increase from the previous year. And for the state of Colorado, it was $1.5 billion in sales in 2017. And again, that was a 15% increase, so not as big of an increase in that year as the previous years, but as this slide shows, a steady incline from 2014 through 2018, an increase in the number of sales of marijuana. The blue line is medical sales, and the other line is recreational sales. So you can see that it took about a year for recreational sales to surpass and to increase over medical sales, or I'm sorry, recreational sales to go over medical sales. Why is that? There's lots of speculation. The tax rate, I think Joe mentioned this morning, there's different like dosing and things like that, and potency and purchase limits like that for the medical side. And so we actually thought, we were surprised to see that it took a full year for recreational sales to catch up and then surpass medical sales. And then we were surprised that medical sales didn't decrease more. So we did see a slight decrease over the last 6 months or so in medical sales, but it's not so much that recreational sales have replaced them. It kind of seems like the recreational sales have been added on top of the existing medical sales. Again, to give you some context to what that means, it is still in the state of Colorado less than 0.5% of our overall GDP. So that $1.5 billion in sales, compared to our $343 billion in GDP in 2017, is less than 0.5%, so 4.4%. So small that it was pretty hard for us to even get that sliver to show up on the pie chart. I think that's actually fake sliver even. So how is marijuana taxed in the city of Denver and the state of Colorado? As the mayor mentioned this morning, we had a recent change to our tax rate here in the city of Denver. So I've got pre-October 1st, 2018 and currently what we're taxed at. So there's a 15% special sales tax on retail marijuana from the state level. And then at the city level, there's a 3.5% tax that was there up until October 1st. And as of October 1st, it's now up to 5.5%. That tax rate, or that special sales tax, was voted on by the Denver voters in the fall of 2013, passed and approved 1 year after the state voters approved the constitutional amendment. And so Denver voters recognized that there would be a regulatory burden on our city and wanted to ensure that there was the proper resources to respond to that. And so they passed this floating tax. It is able to go up to 15% just with an act of council. It doesn't require another act of the voters. And so as of October 1st, it did go up 2%. That was the first time it changed from 2014. And that additional 2% will be dedicated to affordable housing programs. We also in Denver have the Denver standard sales tax that goes on to recreational marijuana. So today, if you want to go out and purchase recreational marijuana in Denver, it'll be taxed at a rate of 24.15%. Medical marijuana is a different story. It is taxed at it is exempt from both the state special sales tax and the Denver special sales tax rate. So it only has the standard sales tax of 2.9% and 3.65% for the city special or standard sales tax. So 6.55% for medical marijuana versus that 24.15% for retail marijuana. So what does that all turn into for revenue? for the city of Denver, that meant in 2018, we are projecting to have $48 million in revenue from all the various different revenue sources from marijuana. I put those in 5 different buckets. 2 of those are the standard sales tax, 1 for medical, 1 for recreational. The third one being the licensing fees. So the licensing fees that the businesses come in and pay when they get issued their license and apply for their license. And then the special sales tax that we have in the city of Denver. And then the state shares back a portion of their 15% sales tax back with local jurisdictions. They share that back only to local jurisdictions that have recreational marijuana sales, and it's at the percentage in which that jurisdiction had marijuana sales for that month. So if about 70%, I think, of counties and cities in Colorado have opted out of recreational marijuana, so they don't get any of that 15% state share back. And Denver gets a portion of it based on the percentage of sales that happened in Denver for each month. Again, some context. What does this mean for us? For Denver, our total general fund revenue budget is projected to be $1.3 billion in 2018. And that $48.1 million projected in marijuana revenue from those 5 sources is about 3.6% of our overall general fund. So a significant portion. We like having the $48 million. It's not a bad thing. But it is still a relatively small percentage of our overall general fund budget. Just to break that down a little bit more, it looks like we're missing some information here, but just to break that down a little bit, this is again showing the different sources. The one that's blue that's missing is the $7.5 million in medical sales tax, and the green is that's missing up there is licensing fees, and then the big piece, the big orange piece, is the retail sales tax, the standard sales tax. So total revenue in 2017 was that $44.7 million. All of that goes into the general fund and then gets distributed out to our different departments and agencies. And we can identify and reinvest the state share back that we get from the 15% special sales tax at the state, as well as the special sales tax in the city. And I'll go into that in just a second, but that's how that is broken down. So we are able to, of that projected $48 million, we reinvest 8.8 in 2018. We reinvested 8.8 of that back into regulation, enforcement, and education. So you can see how that's broken out between there, about how those expenditures are broken down within our budget. And that $8.8 million is distributed to city departments throughout the city, through all the departments that we've talked about today that we collaborate and work with on a regular basis. This is that percentage of how they're broken down. Those people that work for those departments still sit in those departments. They still report into their departments. And the funds for here go into those different city budgets, and it's allocated through our regular budget process. We, from the Office of Marijuana Policy, helped inform these decisions as how this budget should be allocated throughout the city when it comes to how resources could and should be spent on marijuana regulation, enforcement, and education. And so, we weren't a centralized department, but we do have that coordinated effort through our budget office to make sure that each of those departments have the resources that they need in order to regulate and enforce and provide that education. Ashley mentioned this morning that has all equated to 58 FTEs that we have added to Denver's budget since 2014. This is how they're broken down in between the different departments, and it's grown a little bit since 2014. I think it was around 35 in 2014, and we've added a couple more over the last couple of years. And I would just emphasize that this is important because it's back to that 3.5% special sales tax that has allowed us to add these resources. And without these resources, we wouldn't be having the strong regulations and robust enforcement that we currently do have. And so a lesson learned that we always refer back to is the importance of having that special sales tax to be able to add these additional resources. For Denver, basically, we have been able to, even though it's a small percent of our overall general fund, and it's a small percent of the state's GDP, it still does bring us in a surplus, right? There's that 45 million in 2017, and that 8 million that we reinvested into the budget for regulation, enforcement, and education. So you can see, there's a pretty good, I guess, surplus that you see going into our general fund that's able to go towards additional programming and additional resources throughout the city. So this last slide that I have is just to show what we do with that surplus. And so these numbers here go back to that $8.8 million in regulation, enforcement, and education. And then we basically can identify where all the expenditures are from the state share back and the special sales tax for the city, and that's what this pie chart here breaks down. So the 8.8 on the regulation, enforcement, and education, and then in 2018 we also had $2.3 million that went to public health. The majority of that is affordable housing programming, and we'll see that increase in 2019 with about what we're expecting to be about $9 million going towards affordable housing because of that 2% increase to our special sales tax. And then $10 million has gone to improvement to city and its facilities. The majority of that, well, all of that is parks maintenance, deferred maintenance, first parks and streets. So of those total dedicated to expenditures of 21 million, about 8.8 are marijuana related. The rest have gone into the public health and the improvement of our city facilities, which leaves about, I believe, 27 million going back into our general fund to add capacity to the city's budget every year. $27 million additional that the budget office gets to allocate out and that the mayor gets to allocate out to the different departments throughout the city each year. So I'm going to pass it off to the rest of the panelists, and then we'll save time for questions at the end.
All right, aloha. So as you heard, I'm from Hawaii. So I am the state bank commissioner, and my presentation is cannabis is legal in my state. Why can't I find a bank? I know that this is a subject that is near and dear to people's hearts. All right, so what I'm going to go over are some of the federal laws, the state landscape, our case study in Hawaii. We did something a little bit different, and what to expect when you open an account, and you probably felt this pain when you open the account. So this is a chart of the 30-ish states so far that have some sort of cannabis use, both a permitted, medical only, and not permitted. Not permitted are the white states. And that is as of June. So it's since the landscape has changed a little bit since then. The federal laws. So these are the basic laws that banks look at. And so this is the main reason why you cannot get one of those precious bank accounts. The Controlled Substances Act. So it makes it a crime to manufacture, distribute, or dispense or possess with the intent to manufacture, distribute, or dispense a controlled substance, which is the cannabis. Money laundering. Money laundering actually has two main components of it, but the main one is that the bank employee who actually takes in the money, who notices or lets the money laundering go through, can actually face personal jail time. And we have seen this in the past few years. People are serving a minimum sentence 5 to 7 years. So bank employees, they really don't want to do this money laundering thing. Money spending statute, that's a little related, but that does not have a personal incarceration. That only goes to the companies. A lot of times it's a penalty of administrative fine. Aiding and abetting. This is actually what banks feel like they're doing when they open an account. They're aiding, they're, assisting illegal activity. There's recent case law talking about how the defendant need only to facilitate one component of a criminal offense to be liable. So opening the account, that would be enough. Or if the account was open and they let the transactions go through, that's enough. There was a 2016 GAO report on the Department of Justice, the U.S. Department of Justice marijuana enforcement, and which led to the Cole memo. All of these slides are available. I'm just kind of rushing through because I really want to go through a case study, but I want to set the groundwork. The DOJ apparently sent out warning letters, and those are in quotes, to approximately 1,900 owners and lien holders of medical marijuana dispensaries from 2007 to 2013 in response to requests from civil leaders, municipalities, and law enforcement officials. So if you receive one of these warning letters, I don't know what it said exactly, but I have a feeling it said something about they're going to enforce the Controlled Substances Act and whatever the penalties are. FinCEN, this is the Financial Crimes Enforcement Network. They also have some guidance to banks who wanted to do this, to provide banking services to cannabis-related businesses. And what they wanted the banks to do is to be in compliance with the Bank Secrecy Act laws, so the money laundering laws. They believed that the guidance would enhance the availability of financial services. They thought it would allow banks to open these accounts for cannabis businesses. Of course, it did not. I think most banks were more scared. All right. In particular, FinCEN provided that it could open, close, or refuse to open any particular account. And what they did was set up what are called the 3 suspicious activity filings. So every time a transaction went through, the bank has to review the transaction and file a report. And so, as you can imagine, it's kind of expensive for the bank. And if it gets to be too expensive, of course the banks are going to start closing accounts. And many banks, and credit unions I should say, but mostly many banks, have a policy that if they file 10 or more of these suspicious activity reports, they get to close your account. So they send you a letter and say, please see your account opening disclosure. We're going to close your account. Here's your money. Thank you. So if you received one of those letters, this could be one of the reasons why. They filed too many of these what's called marijuana-related filings. Okay. Then FinCEN also did one extra thing for banks to do, which was to call out different red flags for banks to be aware of. So, and this is for individuals. So if one of their current bank individual customers happened to be using a state-licensed marijuana-related business, like purchasing cannabis, they may be allowed to close that account too, because now they're aiding and abetting or allowing money laundering to go through. They don't want to be the laundromat. All right. So there's a whole bunch of red flags. I think there were 20 of them. The Department of Justice, the Cole Memorandum, I think everybody was aware of this. So it's recently been rescinded under Attorney General Jeff Sessions. But what it had was these 8 priorities that have been talked about, in which if you comply with those 8 requirements or rules that you could open a dispensary or a retail store and not really be in danger of getting any enforcement from law enforcement. There was another update in 2014 on Valentine's Day that provided extra guidance to mostly banks to say that this would apply to all Department of Justice federal enforcement activity. So all of those alphabets that you're aware of, the FBI, the Immigration and Customs Enforcement, ATF, any one of those alphabet law enforcement agencies, they would only be able to do the enforcement on real crimes, not these ones that comply with the Cole Memo recommendations. They thought that would allow financial institutions, banks, to start opening the accounts. Well, I think it did loosen up a little bit of some credit union purse strings. So those of you who have your account at credit unions, this is primarily why. They feel kind of safe that because of the way that credit unions are formed, which is a membership type of organization, that they have some cover under the Cole Memos to open these accounts. Banks do not feel the same membership relationship. You're a customer, they can close your account at any time. All right. And then, of course, in 2018, all that went away. The good news is I think a lot of the credit unions that have opened these accounts still keep them. The banks, some nationwide, have closed some of these accounts after the Cole Memorandum was rescinded. In addition, what happened is individuals who were using their debit cards to buy cannabis at retail stores or medical dispensaries started to stop using their debit cards because now they didn't want to be flagged by their banks that they continue to buy this cannabis product. They didn't want their accounts closed. All right, so that's about the federal laws. State laws. So as you heard from many of the speakers, there's a lot of state laws, there are county laws, and they're all supposed to mesh together into one nice, easy to follow set of rules. But the state considerations, I think most of the states want to encourage our banks to take a risk-based approach in assessing individual customer relationships rather than declining or to provide all banking relationships or services to all customers related to the cannabis businesses. I think that for those state commissioners who I speak with, we say this consistently. I say this to my banks all the time, but not one of them have opened an account. Although I have to say, all of them have stopped closing individual accounts. So I think it's kind of worked. All right, so banks are still hesitant to provide these type of banking services, and especially loans. If you're having a hard time finding a loan through your credit union or your bank, that's the pinnacle of money laundering to them. It's probably going to be pretty difficult to get that loan unless something changes at the federal level. All right, now I want to switch over to our Hawaii solution. So what happened was we had a pretty unique solution. We wanted to be the first cashless system for cannabis-related services in the nation. So when we launched, or before we opened up the first medical cannabis dispensary, we tried to get this all in place. Unfortunately, the Department of Health acted 3 weeks before I did, and they allowed the first dispensary to start operations, and I was still trying to get all the paperwork together on my end. So what we did was we used, financial technology, which is, all the rage, and we wanted to be cashless. We wanted to not have cash go through our system. As we know, that's probably the most, we feel like it was the most dangerous thing, most dangerous type of industry that we could have. So we identified a Colorado credit union to provide limited financial services for our medical cannabis dispensaries. And what I say is limited, we didn't allow them to branch into our state. We don't allow them to get individual customers. We only allowed them to provide services to the dispensaries and to the related accounts of the dispensaries that couldn't get a bank account in Hawaii. So of course, this was not mandatory for any of our dispensaries. They could choose to use any financial institution they could get a relationship with, or they could use this one that was available to them. What we allowed was, and the fintech company was called CanPay. It's been in the news a lot, so I can use their name. It's a debit payment mobile application. So the customer goes in, they have an account, they need to have a bank account, they need to use their debit card. They sign up ahead of time before they go to the dispensary to say, they're putting $100 on this CanPay account. They go to the dispensaries and they use their mobile phone to buy the product. So the tricky thing about this is that authorization only lasts for 30 minutes. So if they take more than 30 minutes, they got to do it again. So it's a little bit painstaking, I think, on the customer side. But we don't want them to use it forever. We wanted to kind of control the use of it. It's only a one-time use. So once you make your purchase, if it's not $100, you only spend $80. You can't go back next week and try to buy another $20 worth. Oops. All right, let's see. So I will say that our Hawaii solution, we have probably about 40% of customers now using this CanPay to purchase their cannabis product. The usage used to be higher when we first launched last year. It was much higher. But of course, when the Cole Memorandum was rescinded, lots of people pulled back that activity. And they're now using cash or not purchasing. The Department of Health is releasing numbers for this past year, or from January of this year to September 30th of this year, the total cannabis medical dispensary sales is about $8.3 million. So, is that right? Yeah. So this is only our second year. All right. So, let's say you found a bank. What do you expect when you open the account? Well, what I told our medical dispensaries in Hawaii, it's like giving blood. You got to please deposit that pint of blood when you open up your bank account. So they have to follow the customer identification program. So it's, like any other bank account. Show your ID, show your business documents, and in Hawaii, or probably everywhere, you need to show ownership or identification for ownership of between 10 and 25% ownership. So we have a lot of owners of 9%, 9.99%, because they don't want to show this ID to the bank when they open the accounts. Yes, you can imagine. So whatever the threshold is in your state, if it's 25%, there are going to be a lot of people that are 24.99% owners. Okay, the current customer base would include the customers that come to your dispensaries or retail stores, any private ATMs that you might have in your store, armored cars that you use, any security firms, any security operations that you might have. The bank wants to know all of that. They want to know all of those relationships. And then they also want to know, if you're going to bring in cash, how much cash are you going to bring in on a daily, weekly, monthly basis? Just estimate for them. They won't hold you to it, but they want some idea of how much cash is going to be going through their bank. And think back, they want to know how much money laundering they're going to be doing, because depending on the amount of money laundering that they're going to be doing, they may or may not want to open your account. And then they're going to do the ongoing monitoring using software and looking at what your transactions are like. And of course, then for all of this services that they're providing for your pint of blood, they're going to charge you fees. And what I've heard is the fees are, they're not inexpensive. And here's what's going on in the bank's mind as they're opening the account, not only when they're gathering this information, but thinking about whether or not they actually want to open your account. They want to maintain their reputation in the community. Very few of the credit unions or banks want to be known in the community that they are providing banking services to any of the dispensaries or retail businesses. They're aware that regulators, like us, we fine them for any technical errors that they're making on their money laundering program. They also risk, and it doesn't say this, individual fines or individual incarceration. So if we find that someone was purposely not paying attention or consistently not paying attention, we will report them to DOJ for prosecution. Enforcement by law enforcement personnel. So every state, or not every state, there are 29 states that have sort of a pass, so to speak, in the federal budget that says that if you're one of these 29 medical marijuana states, DOJ cannot spend funds on your legal marijuana activity. However, not all law enforcement agencies believe that. They still believe that if you're violating the Controlled Substances Act, no matter what it is in the congressional budget, they will spend resources to make sure that banks are following the law. Banks, of course, are looking for the fees to cover compliance costs, which I enumerated, the monitoring your cannabis account, file constant transaction reports, doing the ongoing monitoring, filing the reports to FinCEN. And then, of course, they spend a lot of money on training their staff, from their tellers to all of the back office people to the execs on the board, because the money laundering laws actually can affect, as I talk about the individual bank personnel that could be sent to federal penitentiary or federal prison, so can the board members. I haven't seen that yet, but I'm sure there could be a case. All right, and you must be wondering, what's Congress doing all about this? So they do keep passing the omnibus appropriations bill that has the rider, like I said, to bar the Department of Justice from enforcing federal marijuana laws on some states who only do medical marijuana. But this is going to end December 7. So we are currently we don't lobby. We're continuing to inform Congress that they need to extend this particular appropriations rider. The States Act was introduced this year by Senators Cory Gardner and Elizabeth Warren to amend the Controlled Substances Act to, have cannabis not be a Schedule I drug. And then the banks have, the bank commissioners are supporting the bill for a safe harbor to address the lack of clarity of how banks can service all of these cannabis businesses. So what we intend is, if cannabis businesses are following the state laws or county laws, that state banks should be able to open these accounts without fear of prosecution. All right, so hope you have a better idea of what the federal laws are, why you have to give a pint of blood to open a bank account. And they're not doing this to be mean or anything. They're just doing this, like I said, so that they will stay in compliance, so that when we, as regulators, go in to examine their bank, they don't run afoul of any of these laws. Thank you.
Great, good afternoon. My name is Kara Martinson, and I am excited to be here today. I came to this conference first about 3 years ago, and I looked like a number of you sitting out in the audience with taking furious notes and eyes wide open. It was a little overwhelming to hear all the information from the various cities and states out there, but I assure you, 3 years later, I feel a little bit more comfortable, and I look at other states and feel like we've made some progress, and it's a great opportunity to now share with you a little bit about what California is doing and some of the innovative solutions that we are developing. As was mentioned, I am the executive director of the California Cannabis Authority. I also wear another hat. I am a lobbyist for the State Association of Counties in California, so I lobby on behalf of county government in front of the legislature and federal government. So we've been at this for some time in California. And I'd like to do two things today. First, I'd like to kind of build on our earlier panel, what Kat and Joe provided you a little more statewide perspective of what California is doing with our implementation of Prop 64 and what our taxation landscape looks like. And I'd also like to introduce you to the California Cannabis Authority. It is a new organization, what we call in California a joint powers authority. This allows two public entities to come together to create another public entity and exercise common powers. And the purpose of that is to gather information, data on the regulatory and taxation side from the state level, from the local level, all for local regulators to have that clear picture of what's happening in their community. And the secondary goal is to provide this information to financial institutions that wish to work with the industry so that perhaps they don't have to give a pint of blood in California. So just quickly, by way of background, of course, in California, marijuana legalization is not necessarily new with Prop 215 back in 1996, but it wasn't really until 2015 that we had a statewide regulatory framework in place, and it was just really for a minute before Prop 64 passed in 2016. And unfortunately, while I think at the time we all thought it fortuitous to have a medical structure in place prior to adult use, it did create a bit of confusion and some additional work as we've been working through the legislative and administrative process over the last 2 years to combine those two bodies of law into one. While they looked very similar, and ballot drafters that proposed Prop 64 reached out to a lot of us that were involved in the medical framework, there were some notable differences, and so it's taking us some time to really combine those systems and get through our administrative process. And as was mentioned, we just are still in the final proposed regulations by all of our 3 licensing agencies. However, the state did begin to issue temporary licenses the beginning of this year. That will expire at the end of this year, and we'll move on to our provisional or annual licenses, essentially. And that's really key because that kicks in our track and trace system in California. So just quickly about our licensing process, built into both the medical, adult use, and now our single regulatory program is strong local control in California, like many of you here have in your states and cities as well. To be operational in California, a cannabis business has to have both a state license and a local license, permit, or other authorization. So it's really up to that local jurisdiction to decide how they want to regulate within their community, and also if they want to ban commercial cannabis sales or not. On the state side, licensing is split out between essentially three main agencies. The Bureau of Cannabis Control. At one point, when we were still calling it marijuana, it was the Bureau of Marijuana Management. I'm looking at Tim out here. He probably remembers, but the acronym was BUMMER. And unfortunately, they legislated that out, but we all thought it was pretty amusing at the time. But now it's the Bureau of Cannabis Control that has responsibility primarily over distributors, retailers, micro businesses, testing labs, and events, and the Department of Food and Ag that largely focuses on cultivation and our track and trace system, and then a smaller role for the Department of Public Health with manufacturing. So I like to include this slide because it's informative, I think, of how we're going to look in a few years. This is where Prop 64 passed in California. And I like to say that while the public was overwhelmingly in support of cannabis, and I think that's actually true on a national level, it becomes a different story when you're talking about permitting and zoning and citing a business in a community. In some jurisdictions on this map, you can tell part of the Emerald Triangle have a long history with cannabis and have the local governments essentially have really good relationships or have been able to work with the industry early on. Others not so much, and it's a relatively new commodity, new industry in California. So it's taken jurisdictions up even until now to really decide how they want to deal with this cultural shift, especially in the Valley. You see orange where voters predominantly voted no. And just drilling down a little bit more, because we have that strong local control, cities and counties are really allowed at any time to decide how they want to permit, regulate commercial cannabis and or tax in California. And unfortunately, I think this slide is actually already out of date because between the time we started issuing state licenses in January until now, or even actually after the passage of Prop 64, cities and counties have been working their way through this process. But you see that bottom category of 30 banned counties, a number of folks that are still thinking about it, that are still conducting that community outreach and working with the industry partners are in that banned category for now. But we do think it's going to evolve back into what the map looked like in the previous slide as far as regulation is concerned. I know there's 9, I believe, local tax measures on the ballot next week, so that indicates that there'll be some additional counties moving from that developing ordinances category up into the regulation space. And on the city side, California has 482 cities, so there is quite the potential for variation in local programs. And last I checked, I don't have as much accurate data on city ordinances, but I believe it was around 150 during the summertime. So they're working on their programs as well. And just quickly, a snapshot of the taxation landscape in California. Prop 64 imposed a 15% excise tax on cannabis businesses, a flat cultivation tax of $9.25 on flower and $2.75 on leaves. And then it also allowed, again, cities and counties to impose their own either special or general tax. And those vary significantly across the state. There are 15 county tax measures in place currently with those 9 on the ballot, and there are a number of city ones as well. And so the variety across the board is pretty significant. As you can see, Humboldt County has a pretty relatively lower tax threshold, just $1 to $3 depending on your type of cultivation in California, and that's on the lower side. Having had experience with the industry and really trying to incentivize folks to come from what I tend to refer to as the gray market space into the regulated space. And then others such as Yolo County and many others have flexibility up to 15% gross receipts, but starting at a much lower level, I believe 4 or 5% currently. And then others such as Santa Barbara have very specific rates on each type of commercial activity within their jurisdiction. So as you can see in California, everybody is doing something a little bit different, which is great. And what we advocate for on most things, local control, the will of the community really to decide what the tolerance level is for certain types of activity, but it does present a significant challenge to state and local regulators. So as we've worked through this process over the last several years, we've identified a number of issues. And first and foremost, I was very happy to hear a speaker from Canada identify data as just a key element to focus on in your regulatory program. And we identified that we don't have any data. We don't have access to as much data as we would like, and that's a significant issue for us at the local level. Although we have a statutory right to information that our state's track and trace system will collect, there's no real method of that information being disseminated to local jurisdictions currently. So that was another issue that we identified. In addition, there are low tax rates, or excuse me, low compliance rates for tax payment, as you can imagine, as we're working our way through our process. And I should have noted on the last slide that because of our variation of tax rates across the state, our tax threshold in California is anywhere between 28 to 40% on products and businesses. So that's pretty significant, and the rate of compliance is still pretty low. I think in our first and second quarter of 2018, we collected $135 million in just state taxes, which is about 30% below what we originally projected. So that's a significant issue that we flagged. In addition, there's no standardization of data collection, and therefore there's no common metrics to measure how we're doing as a state, and even evaluate different programs against one another. So because of all of these issues, counties decided to come together and to form what's called a joint powers authority. And this, again, is two public entities coming together to exercise common powers. And it's a pretty common public entity that we use in California to really do things a little bit more cost effectively and efficiently. And the purpose of the California Cannabis Authority really is twofold. It is to create and develop a statewide data platform to consolidate all this information, a direct nexus and plug into our state's track and trace information, all of that raw data being available to local jurisdictions at their fingertips, a direct connection to state sales tax data, a direct connection to cannabis businesses' point of sale system themselves. Information verification is extremely important so that we can provide the greater landscape and picture of what's actually happening within your community, and what's being reported are one and the same. And then secondarily, our additional goal is to work with willing financial institutions. Most of them are credit unions and some community banks out there. The cost of working with the industry is quite high, and therefore we've seen a lot of high rates on the industry. So we want to be able to provide this information from a public entity to willing financial institutions that want to work with cannabis clients so that they can perform their compliance obligations but have real verifiable information from their regulator to ensure that every transaction that's happening is from a legal one and every deposit is from a legal transaction. I should note that we have 6 counties. It's a voluntary process. We started with 2. We're up to 6 now. Cities will be able to participate. We're in the process of becoming operational, and we're very excited about that. And I should also note that I have a board member here, Mary Zeeb, who's the treasurer tax collector of Monterey County, who's been very instrumental in helping us start this organization. But at this point, I'd actually like to turn it over to our data partner, Adam Crabtree, who is the CEO of NCS Analytics, who has been doing this work in other states. We were very impressed by his firm when we were introduced through the Treasurer's Banking Working Group in California, and we thought it was the perfect fit for California. So we'd like to show you a little bit about the data that we'll be collecting and what it'll be able to do for local jurisdictions in California.
Thank you for that introduction. So my name is Adam Crabtree. As Kara mentioned, I'm also your token data geek. I will try and be mindful that not everyone has my love of data, and we just got back from lunch. It's pretty hard on my ego when people fall asleep while I'm talking. So what's the point of the data? I'm sure you guys have heard throughout this entire conference that data is the key, not only to regulatory and governance, but also to unlocking banking and some of these more advanced financials. So whether we're using it on, sorry, I'll try and be more cognizant of the mic, whether we're using on the pre-planning stage where you see in these GIS mappings, understanding the communities, your concentration level, the impacts that they have, those same data points can be used after they open, measuring the impact they're having, seeing where your tax revenue is, getting these diverse data sets that Kara discussed, bringing them all into a centralized place. A lot of data is amazing, especially with my perspective, but it's almost useless if you don't have people that are in there looking at it, making it valuable and returning back to you. So data verification, we like to throw up this because gives you an example of the different data sources we look at. And I can tell you, because we do this across a few states now, the smallest tax gap I've had in a single month period for a business has been a few $100s, which is pretty good. We're not expecting them to be gap accountants. The widest gap I've had in a single month from the same business has been $600,000. They reported to the local agency they sold $1 million that month. They reported to the state agency they sold $400,000 that month. You can see who they're more afraid of in that case. But it plays upon the fact that many of these systems don't talk to one another. Tax systems at different layers often don't speak to one another. They surely don't interface with the data systems that are used on the regulatory side or within the industry. So the system that we have for California actually pulls all of those in. 6 to 12 data streams, depending on which one we're at, backwards, forwards, upside down, and sideways, and makes those highlighted differences pop out really easily. From there, it gives them these pretty easy to understand and deal with reports, pointing them in the right direction, ensuring that if you do have 54 FTE allocated to your agency, you're deploying them at the right point, at the right time, and in a near enough time frame that it's actually doing something for you. The California system actually operates in near real time. The other things these do is, in addition to pulling out the discrepancies, on the banker side, it populates questions for the bankers to better understand. KYC is the backbone of marijuana banking. They truly have to have a very deep and thorough understanding of their businesses. So having the data is one thing, but being able to use that data if you're not a data geek is a lot more difficult. So the system is able to provide 3 to 5 questions, everything from what's your process for calculating sales tax to, hey, did you run any sales or specials last month? That latter question seems pretty innocuous, but depending on the volatility that's showing up in the data, that can tell me a heck of a lot. Yeah, on Tuesday afternoons, we do buy one, get one free gummy bears. I look, volatility is the same, everything's good to go. No, what are you talking about? That actually triggers the banker's ability or the regulator's ability to take a deeper look into that data. It also makes for great anecdotes when the regulators come to visit. So here is actually just an example of one of those. It also talks a little bit about the system's near real-time capability. These snapshots are populated either within 5 minutes of a transaction occurring, depending on which state, but our slowest interval is daily. That way, if there is something that occurred the day before, the regulators are made aware of it in a timely manner to where they could actually show up on site. Oh, you harvested the plant, or you produced this. Show me. You should still have it sitting there. Let's see it, as opposed to a month, a quarter, 6 months later when the regulators are able to catch back up to it. It also gives you trending. Trending can tell you a lot about it, but I would say the most valuable portion is that real-time analysis, the pushing of alerts. I will throw out my one critique of data, and this obviously hits me as well, but data is not meant to solve all of the problems. It is meant to be a tool for the regulators to use. It better prepares them. Very few systems, mine included, can give you the judge, jury, and executioner, but it can certainly do wonders for letting you allocate your resources to where they're needed most. It's going to point you in the right direction. It's going to tell you where to look. Depending on which system your state uses, it'll actually tell you which packages to take a peek at to see if they might be on more than one store's shelves at a time. But with that being said, I believe we have one more gentleman up after this, so thank you.
So I'm going to talk about a practitioner's standpoint as to how we comply with all these taxes that the state and the local jurisdictions are imposing on taxpayers. And it's quite a daunting task because you've got taxation at the state level, at the local level, and within the local levels, they're all different rules and regulations that they've imposed, and some of them don't understand, how they're going to be implemented. So it makes it very difficult for us to make sure that we're remitting the correct amount of tax. sure. There we go. So one of the big problems that occurred in California was before January of this year, all licensed cannabis companies had to have a license that was held by a nonprofit entity. And most attorneys in California decided to put those nonprofit entities into a nonprofit mutual benefit corporation. What that is sort of like those of you that maybe are members of REI, the sporting goods store. It's probably the closest analogy I can make of that. And you go in, you become a member, and then you buy product, and then at the end of the year, you get this patronage dividend, which is basically like a rebate for buying stuff through REI during the year. Well, cannabis companies were set up similarly to that, but did they pay dividends back to the people that bought stuff through them? No. Did they follow all the nonprofit rules? No. Surprisingly, most of them had sales of $100, and then they had cost of goods sold of $100, and voila, no profit, no income to report. So come January 1, when all of these entities now had to convert to a for-profit entity, then the issue became, well, what do you do about the ownership of that entity? Because technically, people that started these entities up don't own the nonprofit, you know? So someone that put in some money into this entity, somebody that put in, you know, technical knowledge into this entity, they all thought they had an ownership of the entity, and they don't. And so that's creating some litigation and ownership disputes. Other issues involves, you know, things about, you know, what about net carry over losses? What is the cost basis of certain items that were purchased for the entity? Local governments rule in this case, so that some local jurisdictions like a Humboldt County were pretty lenient and said, okay, if the same people are running the old business versus the new business, then we'll just transfer the license over and things are fine. Other counties were not so generous. And so if there was a new entity going to be set up, then you had to go through the whole licensing procedure from scratch. And that really disrupted a lot of people's businesses and made it very difficult for them to be operating in the legal market. You know, there's a lot of discussion now that we have gone into the new tax plan that Trump imposed beginning this year, what type of entity you should structure yourself as. You know, the corporate tax rate has dropped down now to 21%, which makes that very lucrative, you know, from a tax perspective, versus a flow-through entity, which is still at an individual tax rate of 37%. So you need to balance those things out. You know, keep in mind, though, that as a corporation, there's a double layer of tax. So you'll have the tax at the corporate level at 21%, then any dividends that are then distributed to the shareholders are taxed at 23.8%. So your total tax is now 44.8%. So there are reasons for wanting to be in a corporate environment versus a partnership, and it's going to really depend on the facts and circumstances depending on the entity as to which is the better method to go under. As was discussed before, in California, we have different levels of tax depending on, you know, if it's a cultivation tax, whether you're dealing with flower, the leaves, or the fresh plant. There's an excise tax. And note that the way that is computed is if you have product, let's say, that costs $100, then the excise tax is marked up by 60%. So that $100 item now is marked up to $160, and then a 15% tax is levied at that level. This could explain for what was discussed earlier about how some of these databases are going to come up with different numbers because the base that they're using may be different because you have to add all these other things to it. So that'll be something that, you know, will need to be carefully reviewed in order to make sure that you're looking at apples and apples and not apples and oranges there. There's a sales tax rate that varies as well. Medical card holders are exempt from the excise tax, but not the sales tax. And so that's another area that, dispensaries have to, make sure that they're staying on top of and calculate that correctly. And then, of course, the local taxes that vary, but it's approximately about 6%. Real quickly, I'll go over a couple of cases and some recent developments. IBM is working with using blockchain technology in British Columbia and Canada, which is, I think, something that will be very beneficial to the industry. Hopefully, something like that will be used with Matrix, which is the system that's going to be used here in California to track and trace our sales. There's been a lot of discussion about Bitcoin and cryptocurrencies as to, being an alternative to banking, and could that be a solution to the banking problems with cannabis? And, under the FinCEN rules, it just doesn't seem like that's going to be a viable alternative. There's a number of entities that are still trying to come up with their cannabis tokens and other things, but I just don't see that as being an area that's going to be fruitful. Banking still is an issue. It's been discussed before, and even though there's a lot of bipartisan support in the House and Senate, there's still not much movement going there. I think it's still going to be some time, and hopefully after the midterms, maybe there'll be some, more forward progress with that. In California, they were trying to set up a state bank. And there was a number of issues with that. One was going to be the fact that it was going to take billions of dollars to set this system up. The state wouldn't recoup its costs for several years. Another problem is at the federal level, because, when we had the 13 original colonies and those colonies became states, each state had their own currency. So the state of Virginia, let's say, if you were a tobacco farmer, you were dealing with Virginia dollars, it says, from the state of Virginia. And then you're trading with someone up in New York, and they had New York dollars. Well, the Virginia farmer didn't want New York dollars, and the New York broker did not have Virginia dollars to pay him. And so the U.S. Treasury, and that's how we ended up getting our federal system set up so that we could have one currency. So, I just don't see state banks and things, really coming online either as a solution to our banking issues. And then finally, there was a case that came out recently that got a lot of people's attention, a state tax case involving Alterman. And I think this was it's a Colorado case. I think it was a bad set of facts. I don't think the taxpayer here had the proper licenses to do the types of businesses that he was involved in. Also, there was very poor records. And in this industry, that was kind of the norm. If you didn't have records, then it was your word against, the IRS or whoever was trying to prosecute you for taxes. And so I think that this is an anomaly. I think most businesses now are trying to operate in the legitimate market, but it's a very difficult task to stay in compliance. So I wouldn't put too much emphasis on this case in case you heard about it. And that's it. I'm going to move on for questions.
So we do have about 15 to 20 minutes left for questions. If you have one, please make your way to the microphone. And if there aren't, so Mike challenged me and said, 15 minutes for questions in a finance panel? There's not going to be any questions. So I did see one hand earlier that maybe went up. Does anybody have any questions?
Well, thank you very much. I'm Dan from the Government of Canada, and I just have a question. You piqued my curiosity there, Mike, when you said you might show sales revenue of $100 and cost of goods sold of $100, and boom, you're nonprofit. Whether it's nonprofit or for-profit, if the supply chain doesn't necessarily exist, if you go to audit any of these companies, what does that look like?
Well, there hasn't been much in terms of audits being performed, like a true audit like you would think of, like a public company would be audited. There are some reviews and compilations and things that are being done. But, you know, this industry is just now getting to the point where it's growing to that point where it will have, you know, much more transparency in terms of audits and reviews, which is really necessary in order to protect investors and third parties out there to know exactly what's going on with these businesses.
I'll just add to that, a number of treasure tax collectors at the local level are in the process or have been doing it if they've had a medical program in place. But oftentimes, again, the issue is having verifiable information instead of going out and spending time with that individual business and conducting a very thorough audit. Or that's the time-intensive process that it currently takes. And what we'd like to do with what we're proposing is to provide them with additional information directly from the cannabis business's books so that it's not as cost-intensive. But local folks all across California are in the process of doing that now.
Hey, Brandon, City of Portland. Question for all the panelists. Is there anything in any of your state's statutes that limits the amount of local tax that can be levied on retail sales of cannabis? Anything in the state side that limits how much the local municipality can tax it?
Not in Colorado.
Okay,
No.
thanks.
Do you have one in Oregon?
Why, yes, we do. So 3% in Oregon, always conversation about whether it's going to go up or down. So I heard 15% and I was like, whoa. So I just was curious.
Yep, go ahead.
I'm Ali with City of Santa Ana in Orange County, and I saw, I think it was on the third slide at the very beginning, that the peaks of marijuana sales tend to go up in fall and winter annually. And I've seen that several times at different symposia. Just curious if you have any insight as to why marijuana sales tend to peak in the fall and winter.
So that's interesting. I would have thought, I'll have to go back and get to that slide if I can, but I thought it was the summers that we saw elevated sales. In April, obviously. Let's see how long it'll take me to get there. Okay. This one?
Yeah, I believe so.
Okay. So typically for Colorado, we do see, and I guess I'm not seeing the trend so much, but we do see higher sales like in July and August, and then April are normally our highest months for sales. So I don't know, does anybody else have any experience or knowledge about higher months of sales? No?
Just in general, we see a lot of very common buyer behaviors that you'd see across other businesses, and those months do tend to spike. And we have speculated everything from people coming out to visit the fall, the return of students to the colleges, things like that. But it's interesting to see how analogous cannabis can be in an established market to other like goods, alcohol, and things of that nature.
Okay. Oh, yep, go ahead.
Thank you very much. This is great. There was a number of comments on banking. I have a question about insurance. Can you speak to insurance in any of the various states, any of the latest developments? Thanks.
So insurance is, I would say in Hawaii, it's hard to get also. The same thing, the insurance companies are also subject to the bank secrecy law, the money laundering laws. So there again, individual agents or their boards or their company executives can be held to personal liability, and which makes it it makes it risky for them to actually do the selling of that. It is available, I think, but I think that those agents that are selling that, either they don't know that they're selling a particular type of insurance, or that when it comes down to actually paying off on the insurance, they might not pay off a claim just because of the illegal, the Controlled Substances Act.
In California, there's an approved list of insurance companies, and so it's available. I haven't had any clients of mine that have had to make a claim on it, but it is available, and one of them I know insures up to, I think, $1 million in cash, sitting in your safe. So at least for California, it's not a problem.
In Denver, we had a requirement early on that required businesses to have a surety bond. And I think about 2 years ago, maybe a little more, we removed that requirement for businesses. It wasn't, we did hear from the industry that it was something that they were having a hard time obtaining. And then we never needed to really come back and ask for that. So we removed the requirement.
There is a bonding requirement for cannabis businesses in California, but like I think anything in the cannabis industry, most of these things come at a premium, especially now, banking, insurance, and other products. So while it is available, I do think it can be quite expensive.
So I had a is that on? Is that on?
Yep.
So I had a question early on in your first presentation regarding the revenues. You showed $48 million in revenue coming in from cannabis, but it was part of a $1.4 billion or $1.3 something billion dollar budget. Has your budget also grown? I didn't see the expenditure side of things. I'd like to know if there's other increases that you've seen, or if there's any correlation going on between other types of city services, law enforcement in particular, that have either gone up, gone down, after you saw the implementation of the cannabis. And is the $48 million, that's extra, so I assume you must be doing some cost recovery just in your fee structure that I didn't see on the slides.
So, yeah, we have the $8 million that we have basically reinvested of that $48 million back into regulation, enforcement, and education, and all of those $8 million are new expenditures that were not in our budget before. So all of those 58 FTEs are brand new to the city's budget, that we added to the budget starting in 2014 and added on over the last couple of years. As far as cost recovery, I don't, like the licensing fees and things like that. So we have pretty high licensing fees, and I think we bring in a total around $4.5 million in licensing fees for marijuana businesses per year. And again, so we don't directly have the cost recovery back to our licensing staff for that. It kind of gets distributed throughout the city. And so, I mean, if you were going to isolate one of those revenue sources of that 48 million, licensing fees alone would not recover the costs of the $8.5 million, almost $9 million that it costs, that we put into regulation, enforcement, and education.
Was that a conscious decision? I'm sorry.
It's okay. Yeah.
In Colorado, if you wanted to, can you recover your fees fully?
So the question was, in Colorado, can we fully recover our fees, and was it a conscious decision to not do that? So since we had the dedicated sales tax, it's not really a dedicated sales tax, but the 3.5% special sales tax in the city, and that ordinance that was, approved, it was a vote that went to the people, that there was some language in there that did say it was supposed to be first put towards regulation, enforcement, and education. So that's why we used that as our first revenue source for those costs rather than looking towards licensing fees. Anybody else? Yep.
Yeah, I represent a small town in southern Colorado, and I think one of our biggest concerns is actually collecting the taxes. And I noticed that you're having trouble with compliancy. We don't have large personnel like these bigger cities do to actually enforce that. Is there any recommendations or anything that you would say to do?
So we do see pretty good compliance. So we have our tax auditors that go out and do audits on marijuana businesses just like they would with any other business, and they have categorized marijuana businesses as a high risk just because of the level of cash that's happening within the industry. And so I'm not sure what tactics they have in order to see that compliance other than, just the risk of an audit maybe. But I also would say one thing would be just communication with the industry. And, one thing that we found they hold really important is that self-policing. in making sure that they're deemed a legitimate industry. And so if they can hold themselves to that standard to be able to be considered a legitimate industry just like everybody else.
I think that's true in California as well, though we're a little bit behind Colorado, but convenience is also a significant factor in more rural parts of California. If you have to drive, significant miles to your local Board of Equalization office or your tax collector's office, you're less likely to make those payments. And currently, there's a lot of jurisdictions that are still self-reporting as they're beginning to finalize their regulatory program. So we've been working with a number of jurisdictions to help them with that process, which includes setting up special appointments and making sure that it's a secure environment if they are bringing in cash to a local or state facility. Those are things that we've seen across California.
Okay, thank you.